Let's check in now with pro trader Alan Knuckman, the chief market strategist at Paradigm. Good to see you, Alan.
Hello, Angie. Yesterday's profit-taking pullback is a reminder to focus on percentages, not points. It was only 1%, and that 3.5% inflation number, we would have loved that just a year ago.
You have several positions in play. What are you seeing with the market action?
Well, we follow our plan. We take profits, we sell into strength, and we also position with long-term options. So when there are these inevitable profit-taking pullbacks, we've got 3 to 6 month options to take advantage of it because we're in a bull market for everything until proven otherwise.
Alan, I've noticed that you have been taking advantage of China stocks lately that are troubled or beaten down because those have the most room to rally. Tell us about your new trade involving a housing market transaction company that is based in China.
Well, not only do we buy distant options to ride any pullbacks that we might see in the U.S. stock market, we've also been positioning with a lot of Chinese stocks that have great risk rewards, still very much beaten down, have a lot of comeback potential. So looking at that sector, I like BKE, B-E-K-E, which is KE Holdings right now. This is a stock that's 75% off its 2021 top. It's been trading between 12.5 and 15, where it's made this little bottom base. The extreme low is 12.44. So we've seen bullish divergence, meaning new lows but not new highs and implied volatility, and also leverage money flow into this stock, showing us some bull inclination.
What's your plan to profit?
So the way to play this stock, I'm looking at an in-the-money option again. I'm looking at an October 12 call. Again, that extreme low is 12.44, so this below that. October option has 6 months of time. It's trading for about 3.5. The stock's at 14.50, so that 12 call is $2.50 in the money. And if we just get to that 17.50 range breakout target, this option will gain 100%.
Before you take off, let's get your trading day takeaways.
All right, trading takeaway number 1. Act and react. So we saw the 10-year note rally above the 450 level, first time in about 3 months. We've talked about before, test and or reject. Let's see where we are in a little bit of time as we're testing the upside of that range, but stocks are still within striking distance of the all-time highs. Number 2, bullish divergence. I talk about this all the time. It's a sign of the emotion of the market as measured by math. So you could see the fear factor spiked a bit. Now, yesterday we made new relative lows in the S&P, took out last week's lows, but the VIX did not make new relative highs. That's a very, very positive sign of bullish divergence. And number 3, banking it. This week is earnings seasons, and the bank billions and billions and billions of profits will be reported. Now, there was a rumor, obviously, that the death of the banks was greatly exaggerated here, and we've seen that sector come storming back. New all-time forever highs in the XLF were made just 3 weeks ago, and the PE is only 12, so there's a lot more upside in those banks to make their billions.
Thank you, as always, Alan.
Thank you.
Go to businessfirstam.com for where to see our show on TV.